Welcome back to the channel. I'm Jacob Fisher, and today we're talking about how to build credit solely with credit cards. No other fancy types of loans out there, no housing, no cars, just credit cards. You can build your credit a number of ways, but sometimes credit cards are just the preferred option because you can go out there and you can apply to a bunch of different credit cards. Well, hopefully not all at once. That could actually hurt your score. Don't do that. And there's a couple things you need to be concerned about with credit cards to ensure you're not hurting your credit score. So let's get into that and then how to build your credit with credit cards. Let's first go over what makes up a credit score or the credit score factors. Now, 65% of your credit score is broken up into two things: amounts owed and payment history. 30% of it is the amounts owed, which is just the amount that you owe on credit, a loan, or anything else. The other 35% is the payment history, which do you pay your bills on time and have you missed a payment? Those two things factor in a whopping 65% of your score. So if you keep those things really, locked down, then you're gonna have a generally good credit score, despite maybe messing up in a few of the other areas. Missing a payment can be extremely detrimental to your credit score, so it's very important that you at least pay the minimum every single month so that you never miss a payment. We'll get into that in just a bit. The other 35% of your credit score is divided into three things. 10% is the credit mix, so the types of credit you have. If you have 100 credit cards, then nothing else. Your credit score might actually not be the best despite having so many lines of credit, but it's all based in one credit card area. 15% is the length of credit, so how long your credit has been around. If you've had a credit card for 100 years or a loan for 30 years, then that's a pretty good age. Credit Karma is a great tool that I use to at least kind of get an eye on my credit score. You don't have to. You might hate it. I think it's owned by Intuit and Mint. I don't really like them. But Credit Karma just gives me a nice broad overview of things that are open under my credit. Maybe it could help me find anything that kind of comes out there that's not mine. And I can close the account pretty quickly if someone's trying to do identity fraud, which would be awful. The other 10% or the last 10% of your credit score is made up of new credit, which just means how recently did you open up a new credit account, whether it be a loan or a credit card. If you go out there and open up 4 credit cards this month and then apply for a home loan next month, you might not get approved because you just opened 4 lines of credit really quickly, and you could get approved, but it'd be higher interest because you just opened 4 lines of credit. Because the United States has pretty much everything based around credit or having a good credit score, it's definitely something to work on in your adult or 18 plus life so that you can ensure you always get good rates on future loans that you're gonna probably need to take. Technically, you could pay for things entirely with debit or in cash, like a house. You could buy all in cash if you really wanted to, but that would be a lot of money that you've had to shell out right away rather than taking a loan at a low interest rate to maybe let your money grow. So let's start from the beginning. As someone who absolutely never touched credit or had any credit card or credit history in the first place at the age of 18. I think that's the age, right? Maybe you have a job or maybe you're in school, but you have a couple options to get your first credit card. Your first credit card isn't going to be something fancy like the Amex Platinum or the Sapphire Reserve, or actually many Chase cards in that example, but rather a secured card from a company like Bank of America, which owns or gives out a great secured card. You do need to put $300 down as the minimum security deposit on the card before applying for it, which if you don't want to shell $300 out, then there are other options. You can look at a card like the Tomo credit card, where no credit history is required, or one of the Discover student credit cards if you're a student. The Discover cards are meant for students again, so if you have a record of being a student, then this is perfect for you. Even trade school would count under this because you're still a student, or any other school that is, except probably not high school. I actually think the Discover card might help out a little bit because Discover still isn't really accepted everywhere. I mean, they're accepted like 99% of places, but I still run into stores where sometimes they don't accept Discover. So you can't use your Discover card there, which means you don't have purchasing power there. And maybe you didn't need to purchase that thing in the first place and it's kind of like you just want it. You don't need it. And the Discover limits you in that way from not getting it. Plus, it still has 5% cash back with the Discover Cashback Student Card, which is great because a lot of secured cards or first-time credit cards do not offer any type of cash back. You could also consider the Capital One secured card that has a minimum security deposit of $49, which I could shell out $49 for a secured credit card just to help build that credit. And unlike rental agreements for security deposits, you're actually gonna get your money back as long as you don't default on the credit card. Right, so now you've chosen one of those 3 credit cards mentioned and you got approved. So now what? Now you just put little payments on it and you set the payments to auto pay. That way you never ever miss a payment, which is, you always want to set things to auto pay, at least to the minimum. That way, if you don't have the money, it won't take all the money out of your bank account. It'll just put the minimum towards the card and you never missed a payment because you paid the minimum. You can honestly just set up like your Spotify student, which is, what is that, $5 a month, and then auto pay $5 a month for that. That way, your card won't be shut down because you're always gonna have transactions going on it and you're always gonna make payments and build up that credit score and credit payment history. Plus, if you think about it, maybe you have a $100 or $500 credit limit on your card. If you have just $5 on it, that's gonna make your utilization seem really low. Despite only having a $100 limit, 5 out of 100, if they report that, that's still 5% credit utilization. That's really good. If you don't use a service like Spotify or something, then consider doing something like groceries, money that you have and you're going to use. Generally, you're not gonna go to the grocery store and spend more than you absolutely need to because I don't see a point in that. Maybe you're not good at the grocery store and you spend way too much money, in which case, don't use a credit card. Use it for the lunch you get once a week and then pay it off right away. Moving on though, you've had this card for a year or more, maybe it's been 2 years. Your payments have always been on time and maybe you even got a credit limit increase thanks to good behavior. Now is the time you can really start to apply for no annual fee credit cards. I'd say 1 a year, but if you're in college and you don't really need to be applying for 1 every year or 1 every 6 months, which is what I said, or the time frame that you should get a credit card in the past, because you might not have the best income in college and that could eventually hurt you in the long run, because if you start racking up bills, especially on cards that you don't need, it could definitely hurt you when you graduate being in credit card debt. You could consider a higher up card, maybe after your second card. Maybe it's been 2 years since you got the first card and 1.5 years since you got a second no annual fee card. You consider maybe the Chase Freedom card and try to get in the Chase ecosystem, or the Amex Everyday and try to get in there. Or you could go for the Citi Double Cash, which does require a slightly higher credit score, but they have no annual fee, so you can keep the card forever and never pay a fee with it. The Citi Double Cash has reported that you only need good credit score, the Citi Double Cash, you actually only really need a good credit score, and some person who was approved for the card had a score of 626 and is 19 years old and in college. It's definitely possible to get this card early on in your credit journey for an unlimited 2% cash back. 1% when you make the purchase and 1% when you pay your bill. It almost incentivizes you to pay your bill. Then honestly, through college, you could get another card when you graduate, because again, you just don't need to be concerned about having 4, 5, 6 credit cards when you're in college. It's just not what I worried about in college. I personally did just about that. I applied for a card and then I applied for a second card in college. And when I got out of college, I had close to an 800 credit score and was approved for the Amex Platinum right out of college, which I knew I wanted to travel and I knew that card would benefit me a lot. So I went out and got it. It was worth it and my credit history was there enough to be approved for it while graduating or just after graduating. I just applied for other cards, 6 months after that to build up what I have in my wallet right now. And I've got a decent set of cards that I use every day or every other day or whenever I spend money pretty much to earn the max points or cash back. And I'll be going over my full credit card situation. It's not that big in a few weeks. Getting a great score is honestly pretty easy as long as you continue to make payments on time and don't spend more than what you can spend. You should be paying the full balance if you can, but again, sometimes life happens and you just can't. And as long as you're paying that minimum payment, you won't get those check marks or X marks on your credit score for missing payments. You're always gonna have a green check mark for you made the payments on time. Good job, right? Your credit utilization will be higher, again, if you don't pay in full. But if you can't pay in full, then it's, you can eventually get that down lower, and that's kind of an easy thing to fix once you start having an income. Let me know your thoughts on this stuff in the comments below, and if you like credit cards, hate credit cards, and just all of the above. I upload videos on Monday and Friday on travel and finance, so if that sounds like something interesting to you, hit that little subscribe button down there. Thank you so much for watching, and until next time.